it may have passed you by, but Entrepreneurs Relief is not with us anymore. Since the 6th of April this year, it's called Business Assets Disposal Relief. Now, what it delivers in terms of the outcome in relation to the low capital gains tax rate of 10% is the same. And the conditions to qualify for the relief are the same. Now, you remember that the lifetime limit, hopefully you remember, the lifetime limit for Entrepreneurs Relief, now Business Assets Disposal Relief, and from this point on refer to Business Assets Disposal Relief only, dropped from £10 million to £1 million for disposals on or after the 11th of March this year. It was a proposal made in the budget. So let's have a look at what is delivered. It's a 10% rate. And remember that actually the driver for that change was the Treasury and the Chancellor's conclusion that the relief was too narrowly focused. Apparently, in the year that was preceding, 5,000 people were the people that benefited from 3/4 of the Entrepreneurs Relief that was given. And from that, the conclusion was reached that about 80% of people who would qualify, who do qualify for Entrepreneurs Relief, won't be affected by this drop of the lifetime limit from £10 million to £1 million. And also keep in mind, when you judge how much of that £1 million you have available to you, you need to take account of past disposals, even going back before that 11th of March change date. So a quick reminder of the conditions that you need to satisfy to qualify for Business Assets Disposal Relief. First of all, remember it's the qualifying period that's important, and that qualifying period is 2 years leading up to the date of disposal. It applies to any business pretty much that you own that's a trading business. I'll come on to what that means in just a minute. So it would apply to you for that qualifying period if you've been a sole trader in a trading business or a partner in a trading business. Now, if you're a shareholder in a trading business, then that company needs to be your personal company. Next question, what does that mean? Okay, you need to satisfy these tests. You need to be entitled to 5% or more of the voting rights in that company and 5% of the shares in that company. And in addition to that, you also need to be entitled to one of these two things. So it's either 5% of the value of the business, the proceeds of the business on sale or winding up, or 5% of the distributable profits each year. And you can be entitled to both of those. Of course, that would be fine, but just you need to be entitled to at least one of them. So that's what makes it a personal company. You also need to be an office holder or an employee in that company with the shareholdings and the rights that I've just described. So that's what will get you to be entitled to that 10% rate, which will deliver a benefit of effectively at most £100,000. So let's not throw that away or dismiss that. Now, that point trading company that I mentioned earlier, what qualifies as a trading company? One that has its activities mainly in trading. What does that mean? Well, one that isn't substantially an investment company, or one that isn't substantially carrying out non-trading activities. So what does substantially mean? Broadly, a 20% test is applied across a range of activities by HMRC, and then they look at and make a decision in the round, so to speak. So they'll look at generally the time that you spend working in the company. Is that more than 20% of your time spent working in the company? On investment, non-trading aspects, is the asset value of the company taking into account the goodwill value more than 20% represented by non-trading assets, investments? Is the income that you receive in the company more than 20% non-trading income? Taking all of, if you satisfy all of those tests, then there's a good chance you'll probably be treated as a non-trading company. But they do look at things in the round. It seems that in practice, the most determining factor is how much time you spend, what you actually do in the business, and not so much how much income the non-trading activities bring in. So that's broadly the way it works. We get asked from time to time, is holding a large amount of cash in a business detrimental? Could that trigger the non-trading qualification, with that determination? And the answer is probably not, as long as that money came from trading and rests just in a bank account. You've taken no positive action to invest it. So they're broadly the rules. They remain as they were, so there's nothing new in those rules. The only newish thing since the 11th of March is the dropping of that lifetime cumulative allowance from £10 million to £1 million. And of course, the change in name. No longer entrepreneurs relief, but business assets disposal relief. Bad, I am duty bound to say Shamon after that, and it is Shamon, because apparently Michael Jackson used that expression to give credit to Mavis Staples of the Staples Singers, who used that phrase, that expression, in the pretty good Staples Singers song, I'll Take You There.